Good morning. My name is Rob Isey, and welcome to my continuing series on international tax issues. First, I want to congratulate all my friends for completing busy season on October 15th. How many of you actually charged hours on July 4th? I know a lot of accountants who did. Congratulations on the end of that nightmare this past year. Well, let's look forward. I don't know about you, but my firm is looking forward to a lot of M&A activity the last 2 calendar months of the year. And I want to talk about a relatively simple issue about the tax implications of U.S. holding companies for foreign acquirers. You can either use a U.S. holding company or not use a U.S. holding company. The benefits of using a U.S. holding company are consolidation. As you can see in this picture, we have U.S. Holdco owning U.S. subs 1, 2, and 3, and of course, U.S. Holdco is owned by Forco. By using a U.S. holding company, the 4 U.S. entities can file a consolidated tax return, everything lumped into one return. As a result, you can get the benefits of, say, losses in U.S. sub 3 offsetting the income in U.S. subs 1 and 2, and vice versa. So, as a long-term basis, those benefits of consolidation can be great. However, if Forco anticipates selling off one of the U.S. operating subsidiaries, it's not a good structure because U.S. Holdco will theoretically recognize gain on the sale of one of the subsidiaries. That gain results in earnings and profits, a U.S. tax definition, and as a result, when those earnings and profits are distributed upstream to Forco, that's going to be a dividend and subject to U.S. withholding tax unless reduced by a treaty. However, if you want to hold the long term, those benefits of consolidation are great. On the other hand, what happens if you don't anticipate holding the shares of companies for a long time? You need more of a short-term structure. Well, if you're only going to hold the shares for a short term, I don't recommend using a U.S. holding company. You want to have to pay tax on gain when you sell the shares. And when Forco owns shares of U.S. sub 1, 2, or 3 directly and sells any of them, assuming they are not U.S. real property holding corporations, there isn't going to be any tax in the United States. As a result, there won't be any dividend, won't be any E&P. You don't have to worry about all that. And there won't be any tax. Now, they don't get the benefits of consolidation. So if one of these entities has some losses that it's incurring, it won't be able to offset them in a consolidated return. But in the short run, if you want to sell and you're going to sell at a gain, you don't want to have a U.S. holding company. Well, that's all I have for today. Relatively simple issue, but a very important issue. Once again, congratulations to my tax compliance colleagues who are done. I look forward to talking to you next time when we further discuss international tax issues. Have a great rest of the day, everyone.